Tesla has been on a big run the last few months. It's up 115% so far in 2023, and our next guest is one of Tesla's biggest shareholders. Joining us right now in an exclusive interview is Ron Barron. He's the chairman and CEO of Barron Capital. And Ron, it's good to see you. It's good to have you here in studio.
It's great to see you, too. So I just want to say, before I left home, my wife says to me this morning, I don't want you telling any more of your weird stories. That was going out the door. Don't tell any of your weird stories. And so just one little story. I'm not going to tell you this. The other one I'm going to tell you later.
Yeah. I thought we were going to end the interview right now. If you can't do any of your, what are we going to talk about?
So the first thing is, I want to thank you. So congratulations, Joe, on your Bitcoins. Amazing.
Yeah.
Number one. Number two, I've been in this program for 17 years. Lori just told me 17 years. So because of you, people recognize me everywhere. It's just amazing. You know, say thank you, walk over to me all the time. I'm walking to work the other day down Park Avenue, and a woman comes running at me. I'm going south, and she's going north. She comes at me, and she grabs my arms, and she says, thank you, I love my smile. I said, well, I'm not your doctor. And she says, well, who are you? And I said, well, I'm Ron Barron. And she says, Ron Barron, you're that really cool guy on CNBC all the time.
Yeah? Well, you must get that a lot.
Pretty amazing.
Right.
That's the weirdest story.
It's all relative, too, Ron.
Yeah. Right.
Yeah.
All right, so what do you want to talk first? Do you want to talk the broader markets picture? Or do you want to talk Tesla and the run-up of it? Let's see.
Well, so I just want to mention for a second about, I'll talk about that in just a minute. I know that's where you want to get to. But yesterday or the day before, I was watching your show, and you talked about ESG and how a lot of states are passing legislation or trying to pass legislation to say you shouldn't consider those factors. You should only consider how you can make the most money. And I would point out that we do consider those factors. We do consider good governance, how you treat employees. If you're not treating your employees well, how are you going to retain them? How are you going to hire the best? And how are you going to keep them? How are you going to train them? So basically, we're interested in these things, and also we're interested in making sure that the companies in which we're investing haven't got these risks that we're not aware of. So we are conscious of that. And to argue against the idea that it's not important about how much money you're able to, only making most money is what's important, that we've been conscious of this. And because of that, we've outperformed. So 98.8% of our stocks of our funds have done better than the market. And 45.5% are in the top 1%. Not only in the top 1%, but number one in their categories. And Barron Partners Fund happens to be the #1 performing mutual fund in the United States since 2003 when it became a mutual fund. So we have been able to perform well, taking into account these elements.
Let me just say, though, ESG, I think it depends on who's using it and how they're measuring it. Obviously, you're not going to say you're against the environment. You're not against social or governance issues. But sometimes people get in and measure things in crazy ways. And I think a lot of the pushback comes from the bureaucracy that comes from this and the greenwashing that this is used to dress up or dress down other places. And I think part of the problem comes from, big institutional shareholders who have said you're going to do things this way. And it's not their money that they're even talking about.
I agree. Well, we're not like that.
Yeah, I think this argument gets so convoluted because it really depends on what you're talking about when you say ESG.
I agree. I agree. Anyway, so we are conscious of how companies act and how they treat people and how they treat shareholders, and so we're aware of all these things. Our business, we keep expanding. We've never had a layoff in the history of our business, so therefore people feel comfortable working for us. They trust us. And we just keep growing. So we're now 197 people, 45 are analysts, portfolio managers, and we do the best we can for our clients, and we do the best we can for our customers and our employees and shareholders. And so one of the things I think is really important is that we don't worry about the stock market. We don't worry about interest rates, economy, what the government's going to do, wars. In my whole history, there's never been a good news year, with one exception, when they took down the wall in between East and West Germany. That's it, one good year for my whole career. And yet, the stock market in this whole period of time, with terror attacks and inflation and wars and pandemics, with all of that going on, the stock market is up 34 times since 1970 when I began my career. It was 1,000 then, it's now 34,000. And the economy, by the way, in that whole period of time, is also up. It's up 33 times. It's gone from $800 billion of GDP to 26.25 billion. So despite all this stuff everyone talks about all day long and trying to figure out what's going to happen, market's up 33 times. And what I think is growth is now beginning to accelerate. And over the next 50 years, compared to the last 50 years, I think that you're going to have faster growth than 7%. But assuming that you get the same 7%, that means that you're going to have 35 times your money over the next 50 years, which means that the Dow Jones, which is now 34,000, will be 900,000. So when everyone talks about, well, is it going to be 32,000 or 33,000 or 30? I'm thinking about 900,000.
Why do you think faster growth over the next 50 years? Because there's a lot of people who think, let's say, over the next 10 years, you could see much slower growth than 7%. I mean, that's been the concern for a long time.
Well, inflation is 4 or 5% of that 7% growth, and real growth has been 2%. And all the growth that's really happened in the world has taken place in the past 20, 30, 40 years. And that's accelerating because of technology.
Inflation, but you expect inflation to be higher too?
I expect inflation to be, as it always has been, as it has been in every single democracy that's ever existed, 4 or 5% a year. So I think everything is going to, be twice as expensive in 14 or 15 years as it is today. So it might touch down at 2 or 3%. But even Volcker, when he left in 1986 or 87, even then it was down to 3% from 18 or 19. We've gone from 9 or 9.5 to 4 or 4.5 or something like that. So maybe go a little bit lower, but it's not going to stay lower. It's part of our economic program.
And supercomputers and AI, I mean, the quantum advances we're going to make in healthcare and technology, and they're coming quicker and quicker. That's the whole Kurzweil idea, is that it used to, might have taken 1 million years for genetic material to aggregate. Now it's happening in 10 and 15 and 20 years. Look what the internet did. Think of 10 more internets between now and 900,000.
I know. Who knows what's going to be, but it's going to be.
I would settle for, what did you say, 32 times your money?
35, 34.
I'll settle for 34 if I'm there in 50 years. Is that if I'm there to enjoy
I'll be
it?
130.
Are you ruling that out completely? I don't think we should.
Not completely. I mean, they used to talk about 120 years as where you're going.
Yeah.
But I don't know.
A glass of red wine might help.
I don't drink.
There at all. Nothing? Yeah. No.
Not since college.
Not since college?
But college, I was fraternity parties and everything. Anyway, so back to Tesla. So I start in 1970. I come to New York. I'm in debt. I'm living in my friend's basement. I'm $15,000 in debt, unemployed. And then in 1982, start Barron Capital. We had 10 million under management, 10 million. Now we have 41.5 billion, and 40 billion of that is profits. And I've gone from having minus $15,000 of net worth, minus 15,000, to my family and I owning 6.9% of the assets that we manage. So it's down from where it was in November of 2001. And I say that what's going to happen is we're going to be back to where we were at the end of 2025, and then we'll be back to our trend of doubling every 5 or 6 years. So that means in 2035, I'm expecting to be 6 times as big as we are now.
So Tesla, you got into this back in 2014, right? 2014 was your first purchase of Tesla?
So I met him in 2010.
Yeah.
And when I was interviewing, and I say we invest in people, bet on people. And when he was at our annual meeting last year and I was interviewing him, he says, well, it took you quite a while to invest in me. It was 4 years, actually. So in 2010, I met him, followed it. 2014, after the stock had gone up, I don't know, 3 or 4 or 5 times, 6 times. At that point, we started investing. And we invested.
Why? What finally dragged you in?
Well, I kept following and kept going to visit him, and finally he was telling me, gee, we're going to grow 50% a year in units as far as the eye can see. And he was doing 31,000 cars a year then, 31,000 cars. And ultimately, we had this meeting for a couple hours in Fremont, and I walked away with Mike Lippert, and I said, man, I can't believe I don't own this yet. Stock was $80 on the way to 200, up from 25 where it come public. And then we've split since then.
Yeah, you've ridden this. I mean, we're looking at the long-term stock. You rode that all the way up.
Yep.
You were in it all the way down, but then back up again, which is what we've seen this year.
Well, not quite all the way down. So we invested $380 million, and we made about $4 billion so far.
Wow.
And we've cashed in about $1.5 billion. We sold for clients 6.8 million shares. Yeah. Three years ago at $225 a share, up 15 or 20 times. And we now have 17.5 million shares. And I think we're going to make 6 or 7 times. I think the stock is now 225, 230, 250. I think it's going to be 500 in 2025. And I think in 2030, it's going to be 1,500. That's my targets.
I think when you sold because you were worried that it was becoming such a huge part of your portfolio. It had risen so much. And I think at the time you told us you wanted to, it was part of your mandate as your funds. You couldn't have one stock be such a big part of your portfolio.
I wanted people to know that I hadn't died. And, that's why they still own the stock. So I just, and I was getting criticized for being such a large holding. And I don't normally buy stocks. I haven't really since 1992. I've been investing in our funds. But I am allowed to buy private companies, and I have a big investment in SpaceX. But in Tesla, I own personally 5 million shares. I bought it after all of my clients had bought their stock. And I said to the board of our mutual funds, I said, look, I'm not going to buy stock for myself any longer. I'm only going to invest in our funds and in private deals. But in this instance, I think we're going to make 20 times our money. I'd like to invest $50 million. And if it works out, then Barron Capital will be stronger financially. And if it doesn't, I can afford to lose. It wouldn't be pleasant, but I will take the chance. And I said that if you approve this, I'm the last person to buy. I'm not taking anyone's opportunity. I tried to get everyone else to buy, and I wasn't that successful. I'm the last one to buy, and I will be the last one to sell. I will not sell a single share for myself until I sell for all my clients. Last in, last out. Okay. And so I bought for the clients. We sold about a quarter of their stock. I haven't sold a single share personally.
It's now $4.5 billion, your holdings in Tesla. That's more than 10%. If you've got $41 billion in assets under management, it's now more than 10% of your funds. Does that get you back to the point where you start to worry it's too big again? Would you sell again for your clients so you're not too beholden to one stock in your funds?
It's a little bit less than 10. I think that, no. It's not anywhere near. I've been very careful about explaining to people about the funds that do own this stock and the clients. And clients periodically call up and they say, it's a little bit too much for me. Can you sell a little bit? Whatever they ask, I'll do. And I told them, I think that you're going to make from these levels a double in the next 3 years, and you're going to make after that, you're going to make to a triple again. So you can. I think you're going to make 7 times your money over the next 7 or 8 years.
Andrew's got a question too. Andrew?
Oh, I'm going to get
Ron,
to why.
I was so curious if you'd explain what your thoughts were on this opening up of the charging stations that Tesla is doing. It's such a remarkable thing, and I think great for the country. Should be good for Tesla, but could cut both ways in that it's also creating opportunity for Ford and General Motors.
I think that it's not that big a deal economically for Tesla. But it's going to make more charging stations available, so people will be less worried about buying an electric car, thinking that they will be able to charge it wherever they go. Most people charge their cars at home at night, so I don't think it's that big a deal. But it will. There's 4,500 stations right now, and 45,000 chargers, plugs. This is better technology. It's faster technology. It's going to make people. His whole idea is to transform our country and the world to electrification, to electric cars, and this is helpful. So basically, you buy a Ford, you buy a General Motors car, you're going to be able to charge your cars and not worry about it because there's going to be a lot of stations you're going to go to, and it's going to make it clearer that this is a really coming thing, and you have to. Everyone's going to. What's really interesting as well is that. Most people would perceive Tesla as a rich man's toy, as a car that's very expensive. The average car in the United States is now $48,000 a car. $48,000 a car. Last year, Tesla cars were $50,000 without a subsidy. This year, they're $40,000 with a $7,500 subsidy, and therefore, they're $33,000. $33,000 you can buy a Tesla where you're buying a regular, and that's like a BMW, better than a BMW 3. And so the Tesla Y is the biggest selling car in the whole world. The Tesla Model 3 is $33,000. And you compare it to any car. This is not a Toyota Corolla or a BYD. This is a Tesla. And when you're buying this car, you get an amazing value. So it's absurdly cheap, $33,000 for a car. and people don't realize how cheap it is. So number one is really cheap. Can I talk about the growth opportunity?
Yeah, I just want to make sure we get to some other stocks too.
Okay, so
yes.
Okay, I'll be conscious. Okay. So the idea is there's only 6% of cars that are now electric, so there's 94% that aren't. There's also a 2 billion car fleet. 1% is electrified. So there's a really big opportunity for growth. Number one, the charging stations. That's an important deal because everyone's going to now know that they can charge their cars everywhere. Insurance. That's another thing that just helps people buy cars. Tesla's return on investment. So most companies, when they make an investment, they make a 15% return on capital. That's target. They won't make an investment unless they can make 15% return on equity on the investment, on capital. Tesla, when they were making a profit of $15,000 a car, they built a plant for 1 million cars, and it cost $7 billion. And that plant would make $15,000 in profit a car. They're making $15 billion on a $7 billion investment.
Ron, let me just interrupt for a second. Morgan Stanley, Adam Jonas, yesterday, he's been a big bull on this stock for a long time. He downgraded it because he said the price is just too high at this point. Still likes the company, but just says it's run pretty far, pretty fast.
Adam's clients are hedge funds. And basically, we sold our, so it's unusual that the stock went down the day before.
Wait, are you suggesting the hedge fund clients had that information the day before?
No, I have no idea. But you're talking to someone all the time who has an opinion, analyst, and he's trying to generate brokerage commissions. I'm trying to be a long-term investor. Long-term investing, that's what we're about. And
so when the stock goes down like it did last year, you don't worry? Because you figure eventually it's going to right size again?
The most amazing, I was not worried. But for clients, the stock went from 300 to 100.
Yeah.
It's now 225, but 250. It's the same price it was 3 years ago, and the business is 3 times bigger. The business is 3 times bigger now. Now they're going to do 1.8 million, 2 million cars this year. 3 years ago, they were doing 500,000 cars when I sold our 6.8 million shares. So basically, it's the same price it was 3 years ago, when the business is now 3 times bigger. And so a guy could say, I have no idea if it's going to be higher or lower in the short term. Elon spoke in Paris at a conference last week, and he was with Arnaud's son. And Arnaud's son said to him, Elon, our businesses in the aggregate, LVMH, are 6,000 years old. You're a teenager. How can you stop? When are you going to stop embarrassing us? With your market cap? And he says, valuations are funny. Who knows?
Let's talk about a couple other stocks, too. Other things that you like. Krispy Kreme. Why?
Krispy Kreme has the idea there is that it's very expensive to build a Krispy Kreme store, but they have 11,000 places where you can buy a Krispy Kreme donut fresh. And now
stores within a store, basically.
Yeah. Walmart, Target, McDonald's now is doing a test. And so they thought that there was 11,000 opportunities for points of presence. They have 11,000 now, 11,800 on their way to 50,000. And now they think it's on their way to 70,000. And that's probably not even it. But every time they invest, I guess, a few $1,000s, in one of these stores that, with the stands that you can go in and buy the donuts, every time they make those investments, you can generate somewhere around $500 a week in sales. And that's $30,000 a year, $500 or $600 a week, $30,000 a year with a huge profit margin on a business that is, and you're going to be adding 70,000 of them. So you're going to have potentially another $2 billion of revenues on a $2.5 billion business.
When did you first invest in Krispy Kreme?
This past year, we've been investing in it. It's around the price that we paid. I guess about $14.5 a share.
Yeah, it's come up for December 30th. It was trading at $10.32, so it's risen sharply. You bought in at the beginning of this run?
We've averaged priced around $14 or $15. It's right around here. So I think that there's opportunities now in companies like Tesla, opportunities in SpaceX, opportunities even, I think, going to be an opportunity in Twitter. But in smaller companies like Figs, like Krispy Kreme, they have been ignored with the technology focus of the market, and there are opportunities in those companies right now, I think.
With Twitter, obviously a lot of sound and fury around that. It's a private company now. You're an investor in it because Elon asked you to be. There was a Pew Research study that came out last month that said 60% of U.S. Twitter users have taken a break from the platform in the past year. They point out that that dates even before Elon took the platform over. So it's not necessarily blaming him for any of those things, but the fickleness of adults maybe coming out of the pandemic when you're not using social media as much, maybe moving on to other issues. What makes you think that there's an opportunity there too?
Well, first of all, he didn't ask me to invest. He's made us so much money, and he was buying.
You asked him to invest, if you could?
Yeah, I said, I'd like to invest, and we invested $100 million. So it's not that big a deal for our clients. It was $65 million for funds and $35 million for me. And I thought that it was speculative. He explained how he thought we could make 3 or 4 times our money in the company, and I hope so. And now that he has hired Linda
Yaccarino.
I think she's spectacular. And she's going to be a speaker at our annual meeting this year.
She is pretty great.
Yeah.
Yep.
We know her well.
So I'm excited about her. And Elon gave a recent presentation. He was talking about how, or maybe she said it, I don't recall who, that in the past 6 months, he's made more substantive changes in Twitter than have been made in 10 years. And so the focus is on video. The focus is on moderation with technology, and all those. There were 6 agencies that had spoken at this conference in Paris, where LVMH was also a speaker, and they all had pause on Twitter before, and they've all removed the pause. So everyone is now okay to invest in Tesla again, in Twitter again.
But you can't. Who?
To invest in Twitter, to advertise on Twitter.
Oh, to advertise.
So the advertisers are all coming back. So cyclically, that was depressed, and now cyclically, it's coming back. At the same time, all those people who paused are now no longer pausing, and they're now engaging. And I think that they will come back. They weren't even doing any targeting. It was very poorly run when it was a publicly owned company. I would assume it will be a publicly owned company again at some point, 3, 4, 5 years from now. I don't know. But we're studying it, and we're trying to make sure that if we do think it's a really good opportunity, that we do make a big investment in it. Right now, we're watching.
Okay. Ron, I want to thank you for your time. Always a pleasure seeing you, and we really appreciate you coming in today.
Thank you.
Ron Barron.
Elon is like 30 or 40% bigger than Zuckerberg. But Zuckerberg knows martial arts. I mean, do you have in the cage match, Elon's like 6'1", I think.
Yes.
He's lost some weight, but he's like in fighting shape, I think.
He feels bigger than 6'1".
But Zuckerberg supposedly won some medals in martial arts.
Brazilian Jiu-Jitsu.
Yeah, I don't know.
Who would you bet on?
I would never bet against Elon on anything.
So you think he's going to kick Zuckerberg's ass? Is what you're?
This is
saying.
like a serious thing.
Oh, by the way, I have so many ideas right now. I need more money. I have so many ideas. I can't.
To bet on this cage match?
Not to bet on
the interview's already over. This was a throwaway conversation at the end. We're not moving back to talk about more.
I don't really bet on stuff.
Okay.
I'm where I don't have any.
DraftKings might
You're
have
an investor,
it.
not a gambler. Is that what we should say?
right.
All right. Coming up, I don't know. I don't know how to.
Who would you bet on?
I'm not sure, because a lot of the judo is you're moving away. It's not like you're attacking, I don't think, with jiu-jitsu. I think it's sort of, isn't it, Sorkin? Isn't it sort of?
Did you see Elon's line, though? He said he was going to use the walrus move, just sit on somebody.
I don't know if you saw, the UFC actually wants to do this. This is like now getting real.
It's going to happen, and I'm not being taken seriously here. Yeah, I know. I don't know.
I worry about, isn't there like a key man risk and insurance policy for both Elon and Zuckerberg?
Right, because stuff happens, man. Stuff happens.
Would you actually want them to do this, Ron, or would you prefer they not?
I prefer they not. But it's good PR.